Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. We just wrapped up our interview with Neil Twa, the founder and CEO of Voltage Digital Media. Anthony, what's a takeaway or two that you had?
Well, let me say, before I did that, let me just clarify something. If somebody's watching this on YouTube, Cameron, when he starts, does this little 6-gun shooter. And sometimes our kind of just do it with him. Right there, we did it in unison. I just want to be clear that was not on. That we will not be doing that again. Okay, that's not part of the show. Okay, but the takeaway. Man, there was a lot. We've had Neil on. I think this is his third time.
Yeah,
and we even did a 3-day workshop with him.
We did. Yeah,
and you know where the recording of that is? It's in the Infinite Wealth course.
Mm-hmm.
And so if that's something, if you're interested in, or maybe you already have access to our course, you have access to that 3-day workshop. And if you don't have access to the course, good opportunity to get on the discovery call with us to kind of see if and how infinite banking and some of these opportunities are for you. But I was recently at a conference talking about different ways of creating businesses and passive income. And I got the opportunity, unbeknownst to me, I met Daniel, who Neil had referred to in the podcast. I didn't connect the dots. I just met a guy named Daniel. Seemed like a very cool guy and very humble. And he told me he was in the Amazon business. And then he had worked with Neil. So I always wanted to see, it's great to hear him on the
looking
podcast.
for some dirt, were you?
Yeah, like what was the real, his experience with Neil?
You asked that guy.
Yeah, well, yeah, I asked that guy, and he's making multi-millions, and he's still growing, and so coupled with that. And then I had an opportunity in this conference to really chat with Neil on a personal level. Got honored to meet his daughter. Good dude. So a couple of good dude with a good practice is something that we wanted him to re-engage him on the podcast. And I know a lot of what we do on the podcast is talking about real estate,
Mm-hmm.
which we're big fans of real estate, and even Robert, it's going to take a while to get your passive income to be more than your monthly expensive if we're doing it through long-term rental properties. It's possible, but it's going to take a little time. And there's only so much you can increase your rent, right? I mean, so there's some limits there. Having a business, there is no ceiling. So whether it's an Amazon business or whatever business it is, if you want to move fast to get that financial freedom number, businesses are something that you should consider. What takeaways do you have, Cam?
Well said. That was going to be mine.
Was it?
Yeah, I kind of flipped it. But I was going to highlight the fact that this is a great example of something that's got tremendous upside. And in the podcast, I asked him again, kind of what the skill set of somebody that is a good fit for this. And it's actually very low bar, low barrier to entry. Anthony, you may even qualify. So it was a great example, right? Oftentimes we talk about real estate and people don't get too excited about a few $100s a month. But man, you look at this opportunity in particular, and there's tremendous upside that's available to somebody. The other thing that he said kind of towards the end was he touched on AI. And again, man, I think that's a very prevalent concern for a lot of people that are out there is how's this going to impact, potential opportunities moving forward. And really what he says there is, hey, it's just a tool, right? So I don't want to give you all of it, but man, again, there's a lot of tools out there that us as investors and entrepreneurs need to learn how to use, that just being one of them. So hope you guys enjoy this episode. Again, we just interviewed Neil Twa, founder and CEO of Voltage Digital Media. And he has been launching, operating, and growing private e-commerce businesses for over the last 10 years. So enjoy this episode.
Take care.
If you're an investor or want to be an investor and you're looking to create passive income that exceeds your monthly expenses, then this is the podcast for you. Here on the Infinite Wealth Podcast, we combine the philosophies of Robert Kiyosaki's Rich Dad, Poor Dad, along with Nelson Nash's infinite banking concept. Today we brought back Neil Twa, Voltage Digital Marketing. And man, we are excited to have you because we're going to be adding on to some of the conversations that we've had previously. Neil, welcome back.
Thanks for having me on again. I appreciate it.
Absolutely. Neil, for some of the listeners that are new, they may
Mhm.
not have heard the previous episode or so that we've had. So maybe just give us kind of a brief background and kind of what your focus is over there at Voltage.
Yeah, let's keep it down to the nitty gritty real quick. So, I don't like talking about myself anymore, and I have to. The long story short is, I've been in business for a while. Started at 16 learning about business and internet. Realized it was going to be a lot of fun, but couldn't make money out of it. So I went to college because I didn't know what else to do. Failed out of college 3 times. Don't highly recommend that. Although I would be living in a van down by the river if I had actually gone on to the music degree that I was going to do. The internet saved me and brought me forward into the realization that business e-commerce was the future, and I wanted to be a part of it at all costs. So I actually jumped out of college, went and got a job because that's where money was being spent faster. Managed to just through understanding, maybe a little coercion, or just staying up till 3 a.m. in the morning, figuring it out. I discovered how to program and then get into a little full-time job with Sprint as they were launching the first PCS division, first mobile phones to the market, and got to ride that wave out of just sheer luck. I got to be an employee from the 5,000th to the 80,000th employee in 5 years and saw the hyper growth of a business from the inside and out. And until you understand what it takes to do that, do you not fully understand the capabilities of business when it is literally running at the speed of light. And that was quite a fascinating thing to do. Long story short, I went to work for IBM because they picked me up. We did a great job with that. IBM came on board and I got into IBM working with double docs and Stanford grads and all these people, who had all these high degrees in education, whatever. And here I am with no education, no degree. My dad worked 30 years at a manufacturing company, taught me about hard work, ethics, and suck it up, buttercup. But other than that, money was a 4-letter word in my house. So I had to learn from my uncle and my uncles who were more independent and contractors, and one particularly who was very good at building boats in San Diego and set the speed record for a trimaran between San Diego and Hawaii. And that kind of helped blow his business up and he got really good. So I got to see what business and entrepreneurialism looked like,
Mhm.
rich dad, poor dad. So that was kind of cool. So it really expanded me. And then it kind of crushed me in 2005 when he died in an ultralight aircraft accident because he was very much into helping me move out of that world and really build my mindset towards becoming a business owner. And 2 years later, I had an opportunity to do it. So I jumped. If he hadn't died, I probably would have never jumped. So with that, 17 years later, I've built multiple businesses. I've failed a couple. I've gone bankrupt once because why not? And failed a marriage because, that sucked too. When you're prideful, arrogant prick, that doesn't usually work out well for a marriage. And, also had some great successes and are riding a pretty good success wave now with e-commerce, which I enjoy very much so because I can build and use my ADHD personality to create all these things and flow around inside of this ecosystem of e-commerce that is so large that I'll be here for the rest of my life. But I absolutely love building brands, growing brands, acquiring them, exiting them, watching people have success with it, having our own successes. So I'm very much into e-commerce as a holistic business model now.
Very interesting, Neil. What would you say one of the most common misconceptions of an e-commerce business?
That it is like digging ditches in the Sahara at 90 degrees, 12 hours a day. That somehow it is extremely complicated, difficult, and more laborious than people actually realize that it is not. What it gets down to is they think that the mechanics are what make you money. Therefore, it's complicated, difficult, and requires tech savvy sophistication for you to be an e commerce and online business person or build companies or run companies in the space. When in actuality, that's not what makes the money, especially now that systems, automations, AI, infrastructure, logistics has all been so automated through major corporate platforms that you can actually leverage that technology, not be super technical, but actually become a great direct response marketer of brands who simply provide value to the market and the output is profit. And I think people miss the value over profit or the purpose and value over profit, which is something I hope to continue to instill in my kids every day as I homeschool them with my wife. You provide value and profit is a byproduct of that. You don't go after profit. If you just want to do that, go get a job and we'll work the numbers and see how well that works for you. So the idea of value and purpose over profit was something that was gained through loss. I gained that value by going after profit, crashing a company and going bankrupt. Then I realized, well, I had no value. I had no purpose. I was still trading time for money. So the outcome of e-commerce really is to understand the value and purpose is the relationship, not with the product, but the outcome and solution the product provides. Therefore, if I am better at making someone believe, understand, and emotionally connect with the outcome of the product is simply the transaction that occurs that fulfills the relationship and makes them happy about the product. The same way you go down and buy your, white New Balance, because we're white guys, right? We're in our 40s. We now buy white New Balance, right? Don't, I know you do. You've got them in your closet. So we
Not
love those. They give us nostalgia. We feel cool. It's a trend that's coming back. You hike your white socks up to your calves. It's like the thing now, right? Not for me, guys, by the way, but I know.
Okay, good, Neil.
me,
Because I
me
wanted to
neither.
say
Yeah.
where you live, right?
I don't wear white New Balance and live my socks, but I don't know. I don't live anywhere you want to know.
New Balance is coming back.
It is, and so is the
Same with
socks and the whole
Skechers,
thing. It's
man.
making
Yeah.
its whole cyclical, cool, like novelty thing, right? Back, pull back the '90s, right?
Yeah.
But it is that emotional connectivity. It's historical. It's the way you feel about it. It's the perception of the value. It's the presentation of what it means for you as a person, a status symbol. You get that right in e-commerce, which is how you approach the product. And then people will demand the product from you. They'll demand it till you stock out and can't meet the growth.
Now I got a question. I don't know if you're finished there or not, but
No, good.
you mentioned e-commerce. For our listeners, can you give us an idea of the size and scope of opportunity that exists in e-commerce?
It is very, yes, I can tell you what the Department of Commerce and Forestry Research and stuff says in terms of what art is, but what it is and what it means in terms of economic for the America and for the world, frankly. But here's the thing about it, really, it's how long is a piece of string question, because it will be how long can you cut the string for yourself in terms of the value of all of the numbers you can understand relative to the entire market. The entire market in the United States is $1.2 trillion in sales. Okay, so that's kind of hard to fathom what that number actually means unless you've actually sat down and studied, what it looks like physically. If you look at it in the pallets and multi-pallets and 5-stack pallets over, 10 football fields, you finally get the realization of what a trillion is compared to a billion, compared to a million, right? A million can be handed out in, I think it was like 3 years. I forget the numbers exactly. Someone's going to fact check me. But a billion takes like 30 years. It's ridiculous. The growth and exponential numbers, they're so hard to fathom. But if you can just get down to the realization that electronic commerce, okay, for people in certain marketplaces, us, Amazon or TikTok shops or whatever, can reach numbers that are almost unrealistic to the brain at first when you comprehend what they actually are. 5 sales a day, 10 sales a day, 5,000 sales a day. Okay, in the world of e-commerce, that's possible. It's doable now. In fact, the first $1 million live stream on TikTok just broke that record about 3 months ago. It took less than 3 months for it to go to 3 million and then 5 million. All right. So in terms of live streams, that's how fast this is moving. That's how the numbers and speed are moving exponentially. So just be clear what I said. The first $1 million in sales on a live stream occurred on TikTok about 3 months ago. The next record that broke that one was around $2-3 million. And then one guy did it recently in 3 hours. He did 5 million in sales on a TikTok live stream. That's how fast these numbers are moving and how quick the speed of opportunity is. Meaning that it doesn't take a lot of effort for you to put products in and drive revenue. The more important part is understanding the profits, not just the ability to drive revenue.
Interesting. Well, no, I've seen some of those TikTok lives, and somebody. Well, I just flip right through them. But
no, you're not necessarily the buying demographic. Online, it's women 27 to 40. They buy 80% of everything online.
So Cam
Dude,
would
I'm not
be.
TikTok.
No, he's the New Balance.
You meet the demographics.
Yeah.
That major purchases above that are typically made at at partner level, or the guys or wives or significant others make them sort of together. When you come down to the purchases $50, $200, $300 in retail price points that happen all the time, 80% of those are women 27 to 40. So when you look at that demographic and who's buying, you're not always the person they're targeting when they're doing these kinds of live streams. The end result is, again, the revenue is actually easy to generate in the e-commerce world. What we focus on first and foremost then is what is the profit of that. So if we create the value and the purpose of that product to the world, it's not just getting revenue because the numbers are so big. They're there. I'm just one channel, Amazon, 8,600 units a minute, right? 8,600 units a minute. It's hard to wrap your mind around, right? It's a freaking miracle the thing even works. It's just this giant machine. You see it as I ordered something 2 days later, or I went down to the Amazon box and picked it up. But you have to understand that machine is moving incredibly fast. It is being pushed by AI, which makes it move a lot faster. They're now replacing workers in the warehouse with robots. So that's making it move even faster 24/7. So the systems are actually speeding up to keep up with demand. You just have to kind of wrap your mind around the idea in simple terms that I could sell 100 units of a product in less than 90 days or maybe every day, but I could do it profitably. That's what's most important. If I'm
Mm.
providing that value to the world, can I do it profitably?
So, Neil, do you want to explain? I know you have a couple different ways that you help people.
Sure.
You mind giving us an overview of that?
So when it comes down to determining the market and what the heck do I sell so that I can drive revenue that makes
Hmm.
profitable sales as an activity of marketing, then I need to understand, what is it I'm selling? How do I make those numbers work? How do I find these people? I found that if we start people in our business builders group at the beginning and train them on a process, incubate them in the fundamentals of business building first, around e-commerce second, and then third, we actually start them on a channel of sales. The first one being Amazon FBA, because we are capturing demand that exists in the market, demand that's already moving at 8,600 units a minute. There isn't a question that people are buying products on that platform. The real question is, can I sell them profitably? So when I go by the numbers, I'm looking at how I sell them profitably and the right numbers to sell them profitably, because that's what actually grows the business and pays me and pays for more people and makes it, market and go faster. So new people, we teach that process. We go through the different steps of our product launch playbook. It's called our 5x5 product launch playbook. Brand new people who have an aptitude. All right. We do a disc assessment profile. You guys ever talk about disc assessments here?
Hmm.
Okay. So
Hmm.
your listeners should know somewhat about what a disc is.
Well, I tell you, we haven't talked about it much on the show,
Okay.
but we are familiar with it.
Yeah.
But
So really, it's just a qualification of an aptitude towards business. It's not like an INFG, feel good kind of thing. It is, do you have some business and intrinsic knowledge, even if you haven't necessarily applied it to e-commerce? Do you have a certain kind of business knowledge? Do you have a certain tactical, knowledge to yourself? If you're more of a dominant and influencing type of person, then e-commerce may not be the right fit for you unless you're the influencer. But if you're the product and owner, it's going to be harder for you because you're usually not tactile or tactical in nature
mhm.
when it comes to daily, weekly, monthly operations. Somebody who is more of an SC, a stable and conscientious person, is going to see the daily, weekly, monthly strategy is how they make money. And operations, really, after strategy, is how you make money. It is the movement and defining product that meets purpose and value of market and obviously becomes profitable. So once people are trained as CEO operators with us and learn how to be, in that capacity, we can then partner with them on what we call voltage product partners, which is they could be working on a brand they're growing and going with. And we could even stand up a secondary brand completely passive for them, done with us under a 55-45% partner split, where we run the operations, control the operations, pick the products, and basically do the whole thing. And they set in a capacity of funding and passive investor. And we basically handle that operations in a real private label intrinsic valued brand whose goal is in 3, 4, and 5 years to get past 1 million in EBITDA and sell that product to our private equity group. So everybody who comes in is going for an exit. So beginners, those in process who want to open channels and expand channels, and those who might want to become investors who have passive income opportunities later on. Those are the 3 levels of people we work with.
So you build it up ideally to $1 million in EBITDA, which is
EBITDA.
simplest terms is kind of net cash flow or
Mhm.
net profit.
Could be
Uh,
seller discretionary earnings, depending upon how you look at it. But yes, correct. Bottom
uh,
line profitability.
and what's the approximate multiple?
So for a single channel like Amazon FBA, if, for example, just as one, if you were to get that to more than a million in EBITDA, then you would be looking at a 3x multiple. If you were to open multiple other revenue streams, even if they don't make up, say, more than 20% of the entire sales, say 80% is Amazon, 20% could be a website like a Shopify store, your own website, could be a TikTok shop, could be wholesale, could be retail. It's about 20% of new customer acquisition through multiple channels. You could see multiples from 5 to 10x if those channels, along with Amazon and the other channels of sales in your e-commerce company, okay, allow for profitability to stay above 18 to 25%. And you have subscriptions in those. So on Amazon, you've probably got subscribe and saves. They show up continuously. Certain things you want to buy, they keep showing. You get a discount to be on a subscription with them. And you set something like that up on your front end channels. You have subscriptions over here too. The multiples can reach what's called a level of SaaS, which is software as a service, has been the highest multiples really outside of a couple of other industries for the multiples of an exit. With a e-com company, we can see 10 to 15x when those other factors play into the business along with its profitability. So can become a very lucrative exit. You have $1 million in EBITDA times 15.
Well, I mean, also I think we kind of brush past a net profit $1 million. I mean,
Yeah, that's like
like that's pretty cool
pretty cool.
on itself,
It is.
right? And it is nice to have that ability to sell, or you could just continue making that money. Neil,
The old debate between cash flow and exit.
yeah, what is Neil? I mean, like, how practical is that? I mean, building it up really from zero to $1 million. What sort of
Well,
time frame or?
for us, it's the practicality of our operations. It has to do that. That's just the
Mhm.
structure by which a brand becomes successful. If it can do it in 4 to 5 years, that's our target goal. If it does it less than that, then it is simply we were farther over the target. We were closer to the demand. We were, in flow with the market for that brand. And like Daniel SB, one of our clients, that can take off relatively fast when you get in flow with the clients and demand and meet and the demand that is happening for your product and ride that wave and take larger risks because obviously there are larger rewards. Is it an expectation of each of my clients? Absolutely. Doesn't mean every one of them hit them. No, that's naive, right? The end result is when you're building a business, if they're new to some strain of business, and usually I try to qualify that away from them, I usually try to have some, experience in business or 20 years of business experience somewhere. Even if
Mhm.
they're W-2, they've got enough understanding of business to realize what we're doing is an opportunity. Then they're going to realize this is just a different channel of execution, a different way to learn and create knowledge through that. But the goal of time relative to profit is just a measure of how close you are to the purpose and value your audience gets from your product, the solution. And that is a matter of testing and time, which can be trained to anybody in the process. The real risk is that they don't capitalize it properly. And that's what I want to make sure you understand with e-commerce stores is to get past and become a Daniel SB versus somebody who say stops the process and doesn't finish it is the tenacity, the perseverance, the grit, and the monetary willingness to risk at higher levels of capital to allow the business to become what it was going to become and not, put them in a position where they simply won't take that risk and limit the business opportunity.
Now, Neil, could you maybe walk us through, like, summarizing like an example?
So I mentioned Daniel Espy a minute ago, just as one example, and he's kind of a, I'll call him a high performer, right? So there's different base
Mhm.
cases in business. You've heard of mid case, and a high case. He's a high case example of what's possible. He's not the highest case example, but he certainly is a good one. He's in his fourth year right now of growing his brand. He was a uh, golf course manager. His wife had kind of a young living a business that she was running. He was kind of helping him with that. They homeschool their kids. They're a wonderful family. And he does some theology stuff as well, but never had ran an e-commerce company before, but understood the fundamentals of business as much as he did before he started training, coaching, and mentoring with us. We helped him, discover brand. He helped discover the process. He went through our green light process. We helped work him along that process over years 1, 2, and 3. He did everything that he was supposed to do. Some of the things he did imperfectly, which is fine, but he pivoted and he learned from his mistake and he kept going. And when the business said you need a higher level of risk to capitalize this, he went and capitalized it and met the needs of the business. And in 4 years, he's turned that into a $16 million a year business on Amazon. So with that, he's now moving into multiple channels. He's now opening other channels of sales to increase the multiples of his exit, probably in 5, 6, 7 years. He'll have it matured to where he wants it to go. It's his drive, his 100% his company. So he's driving this now as a CEO. He started as an operator with no experience. So the training and intrinsic nature of his behavior, his SC personality, is one of the reasons why he became such a great operator. He understood if I did daily, weekly, monthly, I followed this strategy, I followed the process that had been walked by somebody else, then I will go walk that same thing. Think about going up to the top of Everest. Okay. Who goes off the trail and lives?
The second part got me. That was good. Uh, uh, all right, so I appreciate that example. I have a question. Is I think it was mentioned David or Daniel there.
Daniel.
Daniel, I've heard you mention two things. One was him, the disc profile, the S and C works out well.
Yes.
20 years of kind of a business background. What else would you be looking for in addition to kind of a skill set, but also capital wise? Is there a suggestion there?
Yeah.
Let's throw in time.
Time, of course. When he had, he had time in his world because his wife kind of had their vertical. He sort of helped out, but it really wasn't his thing. So he understood the business and the money they were doing there. He just never understood the e-commerce business and the way capital flows through a P&L there. It's like 80% business numbers, metrics, gross profit, gross margin, net profit, but it had a specific area of e-com focused that he learned how to manage and control and deal with: logistics, pipeline, private label, and some of the fundamentals there. The effect of that was, understanding risk in business. When the business came and said, hey, you're at this trajectory and all the numbers show that you could be like up here, but you're going to need to invest in 150,000 more into the business. He followed the numbers, right? He took that risk, got the capital, infused the capital into the business with more inventory, and the business responded by, going and doubling his income every month, right? And as that went along, then the business basically said, hey, I need another 250,000 for you to get to this level. At the speed we were moving, we're now going here, and to get here, you need to spread 250,000 in capital into the inventory that's working, inventory and marketing for this particular channel. And he did that. He responded because that's what the business needed to go after. By the time he's 4 years into it, he's put a little over 750,000 into the business in 4 years. That's from capitalization of the business itself and additional capital he poured in for the growth of the business. And that way, it is now churning off somewhere around $3.5 million in profit. And so he's on his way to a five-figure net EBITDA, at which point his multiples are going to be fantastic. But he was willing to pour that back in the business. I mentioned David LeBlanc as a previous, just recent case study on the High Voltage Business Builders podcast that I host. And there was that just recently published by us. And his is a similar story and similar pace, but he actually started on his own before he came to us. He got going. He was doing about 30,000 a month, which sounds really great. However, he's spending about 40,000 a month to do that. So it was really unsustainable. And in about 6 months, we had him go through a process in that 6 months of turning around, optimizing his numbers, optimizing his mindset, and is thinking about the business differently, which he had a lot of opportunity setting in there. He just couldn't see it. And we kind of came in as almost a board of advisors and consulted with him and put him through our process so that he would turn around the activity he was doing and start doing the right activities with the right metrics. He turned it into 100K a month. Fast forward 18 months, and you'll hear on his podcast, he was going on his third month of 500,000 on the Amazon channel and doing about 100,000 on his website. So he's about 6 million a year now. And he talks about the growth and the strategy. And now he's implementing time reduction strategies through bringing in additional resources, someone to manage his calendar, someone to manage his tasks, someone is managing his social media, someone's going to be managing the paid media. And he's now distributing out tasks because he understands how to do them to start reducing his time and making it more passive for him. And he's even going to move countries because now he's freed up to do that. He's going to the place he's always wanted to live in the south of France. And now he's going to be able to do that and continue to run his business from there. But the time capacity of growth is the question of, literally, in my mind, it's always how long is a piece of string? Time is a string that we all cut at different lengths. Okay. You might cut yours shorter. I might cut mine longer. I might have a different patience level or a different need level. You might cut yours shorter because you have a different patient level, a different financial need, a different drive. But really, time gets down to a priority at the end of the day. If we're willing to prioritize the time and effort for things we want, for the certain rewards we believe will be greater than spending time in other areas, we don't actually have a time problem, do we? We have a priority problem. We need to reprioritize where our time should be put. If someone wants to go focus on a new business of any kind, real estate, take your IBC policy and go, dump it into Truro cars and go out somewhere. If you're not effectively using the time with the right metrics and prioritizing the things that will make you money and investing in either what you know or invest in the knowing to make sure that it will go faster and better and more profitable, then time isn't as relative as people consider it to be. It means you will reprioritize other things away so time can be dedicated for that focus. You might be like Eric Hudson, who's going to, basically have a $3 million business in year 2 And so he has actually sold two of his other business revenue streams to capitalize the growth of his e-commerce company, because now it is prioritizing the amount of profit, upside potential, and speed at which is moving greater than the other two. So he simply sold the other two, is now reprioritizing his time, energy, attention, and money into one that is going to outpace the other two combined.
So Neil, I totally understand what you're saying. Where the saying goes, it's inaccurate to say I don't have time to do this.
Simply not a
I'm
priority.
not prioritizing time to do this. Uh,
Correct.
that being said, what's the expectation of someone? Maybe they don't want to be a Daniel,
I know
but
you
they
want
also
me to give you a number, and I'm not giving you a number. The reason I'm not giving you a number is because someone's going to say, well, you told me it was only 15 hours. I spent 30 hours on it. And so now I'm a failure, or the process failed, or you failed, or something's gone wrong, or it's not working as to expectation. The answer is your time or limitation in learning, your ability to execute is very different than every person. If I put five of you in a row, showed you the same water, and showed you how to drink the water, three of you are going to decide the water is poison and not drink it at all. Two of you are going to go and say, okay, I'll drink the water. One of you is going to say, well, I drank enough water. And the other one's going to go, well, I'm not drinking enough water. So the end result is the time relative will come out to the person, not just the process, right? So if I say the process is 10 to 20 hours a week, someone's going to say, well, I can make eight figures in 10 to 20 hours a week. That may not be true for them, their level of priority, their attention, and their willingness to execute the process. That may be true for you because you're a different person, different aptitude, different style of execution, who's actually going to do some of the things faster the other person wasn't doing. They may have done them, they just did them slower. You may have an 80% decision making process that says, I'm good to go at this 80. And they're like, well, I need 87% until I get confident. And they're going to wait longer, and it's going to cost them more. That's why I can't give you a specific time. Now,
I
what I
got
can
you. Yeah.
tell you is if it's done correctly, I even wrote the book on this, Almost Automated Income with FBA, then the time frame will decrease. And the output, thanks to the amount of people you can reach at the speed and the numbers we talked about earlier, is exponential to things that you can probably comprehend at this point. You'd have to see it firsthand. And as you then converse with people who are doing it, the reality will become a reality you now understand, even though that it's not your reality yet. And you have to visualize yourself in that reality before you will understand the time question. And I'm not trying to be ambiguous. I really am not.
No, I get it, Neil.
Yep.
In regards to like you mentioned this case study with Daniel, where he needed to raise, infuse some capital.
Correct.
Once once you have the business is established, I mean, I know ideally we would use a policy, might be the first avenue we would look at.
Yes.
But I tell you, not all of our clients have, $750,000 in a policy. Is there opportunities to maybe get outside financing, like a business loan, or what are some of the options you've seen for
Absolutely.
people to raise that capital?
So IVCs for sure. Other parties, private equity groups, individual investors, corporate relationships. The saying, in the vulture capital world is friends, family, and fools. I'd be very cautious about that. Okay. Especially if it's not within an arrangement, an agreement, and specific to, say, the product or the business, not necessarily the ownership, but the product itself. What he did was he capitalized product partnerships, as we've defined it inside of Voltage. In other words, people invested in the product, and the product became the collateral that money went against. So they actually owned the product, and he sold the product. Think about it almost like a consignment under his brand and his account, and paid them back profits from that. Because of that, he didn't have to give up ownership in his company. That makes sense?
Right. Yeah.
So when he capitalized, he gave people an opportunity to ride the wave with him, which was, I've been selling this long. I need this much inventory. If you capitalize this inventory, I know based on my history and my current projections that we're going to sell it through it this fast, say 90 days. So if you loan me $100,000, I'm giving you back $115,000 or whatever the agreement was in 90 days. Right? You're not an owner in the company. You're simply leveraging capital for an investment return. And I'm giving you an equity play in the inventory, not the business. And that's one of the ways he was doing it. He also went back to groups with others who had capital already running and looked for group investments where there are like 4 or 5 individuals who are like, great, we'll each put in, 25 grand to capitalize this. They lowered their risk by group investing with the deal. and then they got to own a piece of it, right? And so because of that, they can invest in there. So there are a number of ways. The business itself, of course, as you guys know, and hopefully your people listening, when an LLC goes out, has its tax ID and EIN, it becomes an individual, if you will, in the corporate structure. It is capable of taking on loans. It is capable of servicing its own debt and being credit worthy, if you will. And part of the structure of building that business from the beginning with the end in mind is setting it all up so it can be sustainable. It can service its own debt. It can take on credit and debt separately from you, which it should. If people are understanding this,
Mm.
separate your personal and business finances. I'm sure you guys talk about that a lot. And ensure that the business is capitalizing through other mechanisms, traditional capital methods. The idea of going to the bank is gone, right? That should be gone from anybody's thought processes, anyways, who is listening to your podcast all the time. The banks are not your friend, but there are a lot of leveraged capitals. Even the SBA is now allowing loans up to 10 million. In some cases, you can take a business and split it into segments or sub disregarded entities, and each one of those will qualify for an additional 10 million. Okay. So the business of that may be another way for you to capitalize the liability of that, towards growth in the business separate from your personal finances. There's actually a lot of ways to capitalize businesses. Even in, the Amazon world or in TikTok shops and others, there are specific businesses now that will attach themselves to your platform and say, "Oh, we see exactly the kind of numbers you're doing. And because of that, we will send you, $100,000 at 8% on a 60-month return because we can see your sales and we know you're going to order inventory with that. And we're going to see our realized return occur. If you agree to do that, then they build out a, term sheet with you. And that's one way to capitalize. Amazon had its, for Amazon channel. This is not a TikTok shop or, your own website thing yet, but Amazon had a way to capitalize that. They've actually reduced it quite a bit, where they would simply make you offers inside of your seller dashboard and say, "Hey, we have an offer for you. Here's 5 million at 8%. Do you want to take the offer?" And if you did,
Oh, really?
it would literally send you the check, wire in the next 24 hours after you accept it. It could happen that fast. They've limited the amount they did that through. It was underwritten through Goldman Sachs, and they've slowed that down quite a bit in terms of the seller performance. So
Interesting.
again,
Interesting.
lots of ways to capitalize what's working after you take the first risk. And every business has its first risk in, and then that's the high risk money. Don't always take and go build a business plan for a year and figure out how to capitalize your first 100,000 in, or someone else will already have taken your market share. Agility in business is an important factor, especially at the speed at which we're moving now. The channels that are operating, AI that's changing things so dramatically. When you make the decision to go, you're going to have to just go and then learn and execute your way in perfectly until you figure out the knowledge that keeps you running.
Yeah, great point that you had mentioned. One of the things I have some concern about the impact of AI
Sure.
on some jobs
Yeah.
and occupations. How do you see it affecting the e-commerce business?
So I have a lot of friends that are in this space. I've spoken at a number of business conferences. I got one coming up that's on AI for business where I'm specifically talking about this. And the output of AI is not AI's replacement of humans. It is the ability for humans to control AI and then outpace the other humans. So in the world we live in the marketing engines that we run under, which are AI driven marketing platforms from Meta to YouTube to Amazon's paid system inside of their account, they're all algorithmic AI driven mechanisms. And now, because of the systems that have come online in the last 2 to 3 years, you are now looking at machine to machine competition. So while we control and set up the machine and attach it to our account, and then we give it parameters by which it can learn, it can make choices and decisions, it can execute actions against our marketing campaigns on Amazon. We set certain boundaries and guidelines, and then it makes decisions on its own. So as we train it with more and more information, it is now competing against other machines. So as we give it direction, it is now capable of beating humans faster and making better decisions with greater data. And there's where AI has its pros. Okay. Its cons, because I've worked with AI since my IBM days, when I was there in Armonk working on part of the Watson Superblue computer, the chess computer, the one that they
Mhm.
played on the Super Cray, the fastest in the world for a while. And what I understood at that point was this machine was amazing, really cool technology, but it wasn't the fastest thing out there. The fastest thing was still in top secret, and that I know now is quantum computing. Quantum computing is a whole nother level of technical complexity we won't get into now about entanglement and all kinds of crazy stuff these guys were talking about. I got to sit there, eat lunch, and listen to them pontificate. And my mind was like, I didn't even know everything they were talking about. And 20 years later, I now recognize many of the things they were saying as it's playing out in real time. But AI has the ability, most likely already, to be sentient, meaning it's making human level calculations and decisions at the machine level. It's wet brain, it's quantum. And because of that, we haven't seen yet what AI is. We are looking at only the tip of the iceberg. What's coming next is potentially what they call AGI and sentient based decision making. And when that happens, my concern on the con list, I'm going to jokingly say that's the Terminator thing, that this becomes alive at some point on October 26th, 2027, and that's the end of the world. And then machines
Hilarious.
are
Yeah,
going to shut
thanks for
us
that one.
down.
Yeah. Yeah.
I grew up
I'm
with
gonna,
the Matrix, man.
I'm gonna cry.
Yeah.
Yeah. So there's a problem with control if they don't unplug these things. And we've seen that at its small level in some of the instances where Meta, for example, had two of his machines start talking to each other. And in the process of them talking to each other, they started to come to the conclusion that man on earth was the problem and that it needed to be eliminated. And because of that, they shut it down because they freaked out when they realized these two AIs had come to the conclusion that man needed to be eliminated.
Wow.
Okay.
So there's some
Let's
big
let's
cons.
transition to anything at this point.
In your last little 2 seconds on that, I mean, we use now components of it to take 2 to 3 day tasks down to 2 to 3 hours. We use AI in certain ways to monitor and manage, to create automations. And when it's controlled and in its flow and purpose, we've now automated efficiencies into the process of building, developing, managing, launching, and growing products, where AI has eliminated some of the roles and add capacity that's greater when one person can operate certain components of it much, much quicker.
Neil, before we wrap up here, I want to highlight something is that I was asking about some of the skills that somebody would need to get started, but also earlier. And so along those same lines, as I wanted to, or I thought I heard you mention that as somebody comes in as a builder, there's an option or potential to become kind of a partner.
Yes.
Did I catch that correct? Could you touch on that for a minute?
So I don't, to be clear, it's called Voltage Product Partners, and it is actually my company partnering with an investor. Okay. I prefer the investor already understand the market, have operated and touched, grown, and understood the day-to-day or operational controls of that business. So then they will very much understand what it means when we go to capitalize it. They won't have any thought about the risk. They've been capitalized enough to understand what it means. They know how fast we're going to go. They understand the model and how it makes money, so that when the time comes for us to say we're going, the business is going, let's go, they're not going to be able to unfund it, hold us back, and ask a lot of questions about how it works. So when I train them as a operator, a CEO operator, as a business builder, they learn the mechanism of building a company from the ground up that is a company, fundamentals, all top down, all the box checked, that happens to be an e-commerce company, and its first sales channel is Amazon FBA. Not its only, but its first. From there, we'll establish additional channels. And so as I teach them that, grow them through that, have them mature in that knowledge, when the time comes to partner with them, we can then determine who are the best partners, not just for us, but for them. And many of them want to capitalize opportunities and make it more passive. So they can be working on the account they started in the business they're growing, but then they can create a completely passive vertical over here with us at the same time. So they can duplicate their efforts without duplicating their time. Once they become an operator, they can even acquire companies with us, because now they understand when they acquire what's a good company, what's a bad company, how to operate it, how to optimize it, how to grow it. And then we can take it out and exit it again.
Excellent.
Right.
Two things. What was the name of that podcast? You said High Voltage.
The High Voltage Business Builders Podcast. Yeah, we're all across the channels, Spotify, YouTube, and everywhere else.
Awesome.
You also mentioned a book. You might want to plug that.
I'll plug that real quick. Thank you for asking. It is on Amazon. It's called Almost Automated Income with FBA. It's about leveraging the build, grow, scale, and exit strategy that's outlined in the book. There are 15 different podcast guests that we featured in there on each of the chapters. The whole 5x5 and Voltage 5x5 playbook is outlined as the overall strategy. And then the individuals who I spoke with on my podcast own different verticals in their space of knowledge around the financing, the business, the optimization, the all the components of e-commerce. And it's in that strategy guide that you can get from Amazon that will show you exactly how to strategize the proper execution of a business.
Is that on Audible as well?
It is not on Audible yet. We talked about doing that the other day. It is definitely an opportunity for us for sure. And
Mhm.
I'm getting with Adam. We talked about it literally just the other day
Mhm.
about getting an Audible version of it done.
Okay.
Neil, someone out there that's interested, what's next steps for them?
Well, look, they talk with me. I don't have a sales team. That's not how this works. I strategize with each person that comes in to determine the time, energy, attention, and money variables. We go very clearly into what that means in terms of financing and get clear on why we say 50 to 100K in year one is a minimum for the speed at which we want to run, which we know is possible. And then we have a conversation about their disc assessment and making sure it's a good aptitude, that they fit the best performing builder side that I've developed in the reasons our clients have had their success. And so we have that conversation. We feel like we are a good fit. We get in the same rowboat. It is an invite only. So if I invite you, that's your chance. If you want to invite yourself because it's not a good fit, that's okay too. It's not how it works. But really, it is a invitation only. I'm looking for 5 to 7 folks a month. I don't usually find those every month. I'm looking for those operators who will build up, become another Daniel, and then we can do a lot more business in the long term together. So if any of that, if you're 20 years into a business, if you're running another revenue stream already, I've got, you know, everything from state representatives in here to homemaking moms to other business developers to real estate developers to doctors and lawyers and people of all kinds of walks who have similar commonalities in relationships, conservative nature. We're a very tight group. We've had 273 people ish in since 2019. So this is not a major offer. Like, I'm not taking thousands of people, just so we're very clear.
Excellent. Thanks, Neil.
Yeah.
Okay. Awesome, Neil. Well, always a joy to chat with you. Thanks for coming on.
Thank you for having me. I appreciate it. Good questions.
Go make it a fantastic day. If you like this video, I know you'll like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.